If you're holding XRP, this is one of those moments where paying attention really matters. Right now, a lot of people are focused on short-term price moves, quick pumps, and whatever is trending on social media. But the bigger story around XRP isn't about a single candle on the chart. It's about regulation in the United States, and how that conversation is quietly changing. For years, XRP has been stuck in uncertainty, not because the technology didn't work, and not because there was no use case, but because regulatory clarity was missing. And in the US market, uncertainty is enough to keep serious money away. That's why the SEC has played such a big role in XRP's story. What's interesting now is that the tone around regulation doesn't look the same as it did before. Instead of constant enforcement first messaging, we're seeing more discussion around structure, definitions, and long-term frameworks for digital assets. That shift alone changes how investors think. This doesn't mean everything is settled. It doesn't mean outcomes are guaranteed, but it does mean XRP is no longer being discussed in a vacuum. It's being discussed as part of a larger financial system conversation, and that's important. XRP was designed for payments, fast settlement, low cost, and scalability. Those features matter a lot more when regulators and institutions start focusing on real-world utility instead of speculation. When markets mature, utility tends to outperform hype. Another thing many retail investors overlook is how institutions actually move. Big players don't chase trends. They wait. They observe. And most importantly, they wait for reduced regulatory risk. History shows that when clarity improves, participation usually follows. We've seen this pattern in traditional markets again and again. Clear rules lead to confidence. Confidence leads to capital. And capital changes market behavior. That's why XRP keeps coming up whenever regulation is discussed. It sits right at the intersection of crypto, payments, and compliance. A place most projects never reach. Now, let's be clear. This is not financial advice. This isn't about telling anyone to buy or sell. Markets are volatile, and crypto especially comes with risk. Prices can move up or down for reasons that have nothing to do with fundamentals. But understanding why an asset stays relevant is just as important as watching its price. Instead of asking how high XRP could go, a smarter question might be why it continues to be part of serious regulatory conversations in the US. Because in most markets, relevance comes before results. As policies evolve and frameworks become clearer, assets that already align with real-world use cases tend to stand out. That doesn't guarantee success, but it does explain why attention keeps returning to XRP. If you value calm, fact-based discussions about crypto and US regulation, make sure you're subscribed. And if this video helped you see the bigger picture, a like goes a long way. Stay informed, stay rational, and I'll see you in the next video.